Hey Puppy Trades, I wanted to do a video analysis update on my top 5 sectors for the third quarter. So in this video, we're going to be a little different. I'm going to go through my top 5 sectors by sector of stocks that I think are going to really outperform in the third and fourth quarter. And I think that this is a time right now where traders, they reflect on the previous quarter and they prepare for the third quarter. And think about, if you were an institutional investor and you were turning in your report card today, what are some stocks that you really, probably should have owned? I think Nvidia, Microsoft, Facebook, and Home Depot and IBM, they might jump off the page as really big, outperformers in the second quarter. What are some stocks that you probably should have bought for the third quarter and accumulated? I think there are going to be some stocks that we're going to go over in this video. Some stocks we talked about, getting a large rotation into that we've already seen early into June perform very well. So with that being said, let's talk about QQQ real quick. It's very similar to Nvidia, where we have a wave 1 and ABC correction puts in a wave 2 low. We have a large wave 1 and ABC puts in another wave 2 low at exactly the 61.8% retracement. If we take the length of wave 1, we place it at the wave 2 low, QQQ is incomplete to about 351. That's a conservative wave 3 target. When we look at Nvidia, we'll see why that's conservative. We have a shallow wave 4 correction that retests the wave 1 high. Then QQQ goes on a 5th wave higher, which is the length of wave 1 placed at the wave 4 low. That takes the NASDAQ to about 378. Now, we're going to talk about a lot of stocks in this video. I think some travel stocks will give us nice invalidation levels for the market. And I think Apple holding above 122 is something that bulls are going to really want to look out for. We'll talk about Apple because it's in the first group of stocks that I think are going to really outperform. I want to see Apple hold that wave 2 low of 122. We'll talk about it, but for the NASDAQ right now, when we look at Nvidia, we're going to see this wave 3 target of 351 getting reached really likely is going to be conservative. Then we have a shallow wave 4. We go on a 5th wave higher as high as 378. Now, let's compare that to the Nvidia chart. It's very similar. So if we look at Nvidia, we have that exact same wave 1 and ABC correction puts in a wave 2 low. We have another wave 1 and ABC correction like QQQ puts in a wave 2 low at the 61.8% retracement. So the length of wave 1 placed at that wave 2 low gave Nvidia a very conservative target of 695. Now it blew past that, right? That's why we say that's a conservative wave 3 target. It reaches the textbook wave 3 target, which is, the 161.8% extension of wave 1. So if we look at Nvidia right now, it's definitely probably not the best opportunity in the market, but even if, this high right here of about 775 is its wave 3 high, we'd see it take a shallow wave 4 correction between 707 and 666 because that's the 38.2 to 23.6% retracement of wave 3, and then Nvidia would go the length of wave 1 placed at the wave 4 low. We'd still be looking for a 5th wave higher to 828. So I think Nvidia right now is a really good leading indicator for what we can expect from QQQ, Apple and Microsoft, where the length of this rally placed at this low is going to end up being very conservative. So that's Nvidia. Let's talk about 2 other stocks that I think are really good evidence for the bullish scenario right now. Here's Microsoft. It's very similar to Nvidia and QQQ. We have a wave 1, and ABC correction puts in a wave 2 low. We predict this whole rally, this wave 1. We have another ABC correction to put in a wave 2 low at the 61.8% retracement of wave 1. So Microsoft, I expect, will go the length of wave 1, placed at this wave 2 low. Pretty conservatively, it's going to reach 277, then have a shallow wave 4 correction before going on a 5th wave higher. So what's important right now about Microsoft? It is pennies away from breaking above this wave 1 high that Nvidia's already broken. Facebook's already broken. Google's already broken. The NASDAQ's already broken. Is the bet to be making that Microsoft and Amazon won't go a few dollars higher and break this wave 1 high? I think that's very silly, that would be the primary scenario. But Microsoft, the length of wave 1, placed at the wave 2 low, conservatively takes it to 277 for that wave 3 target. That wouldn't be the top. We'd have a shallow wave 4. We'd go on a 5th wave higher. It's at least the length of wave 1. Placed at the wave 4 low, that could take Microsoft to 302. Now, what's really important about that is that when Microsoft gets to 302, we have this path to 302 right now. and this path ultimately may end at the destination. So what's the destination for Microsoft? Microsoft's larger degree destination is that this is a wave one that is subdivided into 1, 2, 3, 4, 5 waves. We have an ABC correction. We put in a wave too low. So the bull flag traders, they're going to call this the first leg of a bull flag, placed at the wave too low. They're going to say Microsoft has broken out and back tested the bull flag. I believe it has. This is going to be important when we look at the Apple chart. I believe Microsoft, the larger degree wave 3 target is the length of wave 1 placed at this wave too low. That takes Microsoft to 296. That's pretty important because that's the wave 3 larger degree destination. And on the smaller degree, we have the path now in sight for how we're going to get there. So I think Microsoft, gets to 277 at least for wave 3, has a shallow wave 4, then a fifth wave higher. We see Microsoft in the 300 range. That's very bullish for the stock market. In a very similar note, we look at Amazon right now. Amazon is sending a pretty bullish message, right? So it is the bet to be making, that after this huge impulsive reaction from the 61.8% retracement, that, Amazon and Microsoft aren't going to get above this mid to late April high that the NASDAQ, Google, and Facebook and Nvidia have already, broken. I think that's silly that would be the primary expectation for Amazon. This is a 1, 2, 3, 4, 5 large degree wave 1 impulse, almost the exact same dates as Apple. And then we have an ABC correction. We put in a wave too low at the 61.8% retracement. So Amazon is going to go the length of wave 1, place of the wave too low. It's going to reach 3,800, and that is the conservative wave 3 target. We'll have a shallow wave 4 correction. We'll go on a fifth wave higher that's at least the length of wave 1, placed at the wave 4 low. That could take Amazon to 4,230. Amazon and Microsoft, there are a lot of evidence in the short term for big tech. They've got a lot more upside, okay? And you have to look at the entire market right now. This weekend, you're going to see a lot of crash scenarios. You're not going to be able to recreate any of them on the Microsoft chart, on the Amazon chart. I don't even think you can recreate it on the NASDAQ chart. I think there's a lot of evidence, even from Apple, following these two, but Amazon and Microsoft, they're going to break this wave 1 high. They're going to confirm they're incomplete to the upside. The conservative target is 3,800 for Amazon. That lines up with that conservative wave 3 target of 277 for Microsoft. A lot of evidence, from big tech. The market's not done. We look right now. Here's Apple. I think Apple, let's say right now that this is the first group that I think is going to be extremely outperforming in the third quarter. Okay, so the first group of my 5 groups that I think are going to be huge outperformers are the semiconductor stocks plus Apple. Okay, so this group is composed of Apple, Advanced Micro Devices, Qualcomm, and Intel. Okay, this is the first group that I think is going to be a very large winner in the third quarter. So it's Apple plus the semiconductors. Why am I grouping the semiconductors with Apple? I mean, they're really all big tech stocks. Apple does make the M1 chip, and I've noticed that Apple and Advanced Micro Devices, they really often move together. They're all big tech stocks, but I think, semiconductors plus Apple, these are stocks that I think are going to be huge winners in the third quarter. So if we looked at the Amazon chart, it's the exact same dates for Apple, where this is a 1, 2, 3, 4, 5 large degree wave 1, and ABC correction puts in a large degree wave 2 at that 61.8% retracement. And now Apple is following Amazon and Microsoft, and it's going to go to this conservative wave 3 target of about 143. The textbook wave 3 target is that 161.8% extension of wave 1, which is 149. So this is kind of my wave 3 box right now. We'll have a shallow wave 4 correction. Then the length of wave 1 placed at that wave 4 low is going to take Apple on a fifth wave higher to at least 160. And I think ultimately that when Apple gets to 143 to 149, and we're looking for this, wave 4 correction before a fifth wave higher, that the fifth wave going to 160 is going to be pretty conservative. And it's the same reason that we talked about with Microsoft. Microsoft's larger degree destination is the length of wave 1 placed at this wave 2 low. I think Apple's count is identical, where this is a 1, 2, 3, 4, 5 large degree wave 1, and ABC correction puts in a large degree wave 2 low. The length of wave 1 for Apple placed at the wave 2 low will take it to 188. I think that this is a huge bull flag. We've broken out of the bull flag. We're back testing the bull flag. And now Apple is getting ready to explode this summer. I think pretty conservatively, we're testing 160 by the end of the third quarter. And I really think conservatively by the end of the year, we're testing 188. But really, I can see 188 being tested by the end of the third quarter. For now, let's not get ahead of ourselves. We need to see Apple go the length of wave 1, place of the wave too low. It's going to get to 143 to 149. That's the textbook wave 3 target. We have a shallow wave 4 correction, and then a conservative 5th wave higher for Apple would be the length of wave 1 placed at this wave 4 low. That's going to take Apple to 160. For now, general market bulls, they're going to want to make sure that Apple holds above 122, confirms that wave 2 low is in. And then it, like Microsoft, like Amazon, is going to have a big impulsive reaction, break above this high, and go to that conservative and textbook wave 3 target before a shallow wave 4 correction and a 5th wave higher. And I think Apple, also like Microsoft, ultimately is going to make it to this larger degree destination, which is the length of wave 1, placed at this ABC wave 2 low. So I think Apple's going to be a monster this summer. I think it holding above 122 is going to be something that a lot of, general market bulls are going to want to, make sure happens. So that's Apple. Here is another semiconductor stock. So the group, for my very first group for the outperformers this summer, are Apple plus the semiconductors. So Apple, Advanced Micro Devices, Qualcomm, and Intel, I think they're going to be extremely big winners this summer. So here is AMD, Advanced Micro Devices. Yesterday it was up 5% on almost double the average volume. This is a wave 1, and ABC correction puts in a wave 2 low. It has a wave 3 rally that is cleanly subdivided into 1, 2, 3, 4, 5 waves. Now we're putting in an ABC correction at the 38.2% retracement. That's exactly where we want to see a wave 4 in. And look at this time, these time similarities right now where, last year, late June, right before the third quarter begins, AMD is consolidating into a flag, boring traders to tears. And now I think it's going to be the same song in the second verse where AMD has a monster breakout this summer. Okay, so the length of wave 1 placed at the wave 4 low gives a conservative target of 115 for Advanced Micro Devices. I actually don't think that's the right target. I think AMD's real target is going to be the length of wave 3 placed at the wave 4 low. And later this year, conservatively, early into 2022, we're going to see Advanced Micro Devices go all the way to 136. Right now, we want to see this low of 72.50 hold. And we also want to see the 50% retracement of wave 3 hold, which is 67. So 67 to 72. If AMD is above those levels, my next target, pretty conservatively, is 115. I think the real target is going to be 136. I think we're testing that by the end of the year, very conservatively, the beginning of 2022. So that's Advanced Micro Devices. Another huge winner in the semiconductor sector is going to be Qualcomm. So this is Qualcomm. We have this wave 1 leading diagonal, 3 reactions on the upside, 3 reactions on the downside, this ABC, kick out wave, and then a huge rally higher. Okay, so this is wave 1 and wave 2. We have a wave 3 rally, and we have an ABC correction putting in a wave 4 low at exactly the 38.2% retracement of wave 3. So that's where, a textbook wave 4 will end. If Qualcomm holds above 122, and just like AMD, the invalidation level is the 50% retracement of wave 3, which is 112, then Qualcomm's conservative, very conservative wave 5 target is the length of wave 1, placed at the wave 4 low. Just like Advanced Micro Devices, I think the wave 1 target placed at the wave 4 low is too conservative. I think 169 is way too conservative of a target. I believe that Qualcomm's real target is going to be the length of wave 3 placed at the wave 4 low. And we're going to see, like AMD, towards the end of this year, very early into 2022, that the 5th wave higher is going to be the length of wave 3 placed at the wave 4 low. Qualcomm is going to go to 232. Now, the last big semiconductor stock that I think is going to do really well is Intel. I think Intel is going to be a monster in this sector. It's quietly, going to play follow the leader and play catch up in the semiconductor sector. This is a wave 1, an ABC correction puts in a wave 2 low, a wave 3, wave 4 that retests the wave 1 high. Then we have that fifth wave kind of ending diagonal that puts in a large degree wave 1. We then have an ABC correction. We put in a wave 2 low at the 61.8% retracement. So the length of wave 1 placed at the wave 2 low is going to take Intel to 78. This is a 5-month rally. This is going to be a 5-month rally, and that's the conservative wave 3 target. We'll have a shallow wave 4. We'll go on a 5th wave higher. So I'm extremely bullish on Intel. I want to see the 78.6% retracement act as the wave 2 invalidation of 48. Intel, if you're above 48, my next target for you is 78. I think extremely conservatively, that's reached by the end of the year. I think 4 or 5 months from now is a more realistic target. Then we have a shallow wave 4 correction before a 5th wave higher. Intel, quietly, going to be a huge winner in the semiconductor sector. So my first group that I think will be a huge outperformer this summer is semiconductors plus Apple. My second group that I think is going to be a huge outperformer, you know their names. We predicted, many times in the second quarter, a massive rotation in the Cathie Woods corner of the market. And we're going to talk right now about the clean energy stocks, the electric vehicles. These stocks are going to be Tesla, XPEV, Li Auto, NIO, Plug Power, Fuelcell, and Bloom Energy. Okay? And we're also going to talk about First Solar and Polar Power. But let's look at Tesla right now. Tesla is boring traders to tears. I should probably talk about the smaller degree target, but let's talk about the bigger picture. This is really what I think is going on with Tesla on the larger degree. This is the wave 1 before that 2020 sell-off. We have a wave 2 low, then we go on a huge wave 3 higher. We have an ABC correction to put in a large wave 4 low at exactly the 38.2% retracement. The 38.2% retracement of wave 3 is where wave 4 ends, okay? I believe that this is an ABC wave 4 low, and until Tesla breaks below 539, I think it's liftoff time. You look at the past 2 weeks, Li Auto, XPEV, NIO, they're blowing up. They're literally blowing up right now. The Chinese electric vehicle stocks, they're leading Tesla right now. And Tesla is going to explode this summer. It will. This is a wave 4 low at 539. We're going to look at the smaller degree count, but this is what I have. A wave 5 and Elliott wave 3 will either be the length of wave 3 or it's going to be the length of wave 1, okay? You can also take the inverted retracement of wave 4, which you don't even have to do. It would be way off the chart, okay? But I believe right now that Tesla's wave 5 is not going to be the length of wave 1. It literally can't be the length of wave 1, okay? So if Tesla's wave 5 was the length of this wave 1 rally and we duplicated it, then Tesla's wave 5 would not break to a new all-time high, okay? So Tesla's wave 5 can't end right here. Tesla's wave 5 can't end right here, okay? Wave 5 has to break above the wave 3 high. I think Tesla's wave 5 is going to be the length of this whole wave 3 rally, okay? And if Tesla is above 539 to about 546, then I believe the wave 5 target is going to be this 323 rally to 125, exactly 10 months. But I think if really wave 5 is in progress right now, then we can probably shave 2 or 3 months off of that for this wave 1 and wave 2. In 8 to 10 months from now, I expect that Tesla conservatively is going to replicate this entire wave 3 rally placed at the wave 4 low. In 8 months from now, 9 months from now, Tesla will be at 1,370, provided that 539 holds as the low. Now, we're going to look at some other charts in this sector and talk about, why it may happen a lot quicker than that, okay? This could be very well that this ABC correction is not a wave 3 and it's not a wave 4. We'll talk about this scenario with NIO, but that it's also a wave 1. It's actually a wave 1 and a wave 2. And if this is the case, then when Tesla is the exact same target, the length of this rally placed at this low, it takes Tesla to 1370. But what happens is when we get to 1370, one, it could happen a lot quicker in time than the length of this rally. But two, 1370 wouldn't be the top. We'd have a shallow wave 4 correction. We would go on a 5th wave higher for Tesla to 1370. I think right now, let's be a little more conservative, have this wave 3 high, be put in. We're at the 38.2% retracement, which is where a textbook wave 4 will end. And if 539 holds, the length of wave 3, placed at this wave 4 will take Tesla to 1,370. I think that's getting tested by the end of the year. I think pretty conservatively, that's being tested early into 2022. Now, let's zoom in on the smaller degree picture real quick and see how in the world is Tesla going to get there. I think right now it's a A, B, C correction from this high, and this is a wave 1 and a wave 2. Bears, get Tesla below 546, get Tesla below 539, and every day that you wake up and XPEV and Li Auto and NIO are exploding, you're losing the argument that Tesla's taking another leg down to 420. Now we've got Microsoft, Apple, and Amazon. We have a lot of evidence that they're, gonna be very high this summer, okay? So this is a wave 1 and a wave 2. If we're not below 546 or 539, my minimum expectation, late July, early August, Tesla is on this huge rally to 929. And I really think that's going to be a conservative wave 3 target. We have a shallow wave 4, and then we go on a 5th wave higher, okay? And I think that we could see this in just this cycle, that the 5th wave takes Tesla ultimately to that larger degree target of 1370. So bears, you want to prove me wrong, get Tesla below 546, get Tesla below 539. And if EV is about to crash, why is Li Auto, XPEV, and NIO blowing up? Why is Microsoft, Amazon, and the NASDAQ, why are they so close to breaking above, their mid, late April highs, right? That doesn't make any sense. And if we look at Tesla right now, it's about to be follow the leader, okay? It's boring people to tears, but until it gets below 546 or 539, which I don't believe it will do, my minimum expectation is Tesla is going to the 161.8% extension of wave 1, which is 929, very, early into the summer. We'll have a shallow wave 4. We'll go on a 5th wave higher, and we can see right now a path that takes Tesla to that larger degree target of 1300. So that's Tesla. We never want to look at stocks, it's just one. Here's a lot of evidence that Tesla and a lot of these electric vehicles and solar energy stocks were being accumulated in the second quarter. And the large institutions know that Cathie Wood will be making a monster comeback this summer and even into the 4th quarter, okay? This is wave 1. We have an ABC correction. We put in a wave 2 low for XPEV, okay? This is an impulsive reaction, okay? This wave 2 low is in. The XPEV setup is called the Hasta La Vista formation, okay? There's no setup on XPEV right now. It's gone. Okay, and for those hypothetically who got in, this is a monster hold. Okay, this is a wave 1, and ABC correction puts in a wave 2 low. The minimum wave 3 target is 80. Okay, and if we want to be objective right now, what we can do, I really like this Ichimoku cloud for the wave 2 lows when we have these big dramatic bottoming patterns. XPEV right now, wave 1, ABC wave 2 low, and now we have this huge Ichimoku cloud breakout for XPEV and for Li Auto, where it's telling us that this is a huge bottom that we put in, and we're starting the beginning of a brand new trend. XPEV and Li Auto and NIO, they've been blowing up for the past 2 weeks. I think there are a lot of evidence, that they're leading indicators for these, clean energy stocks. I expect XPEV very conservatively gets to 80, has a shallow wave 4 correction, and goes on a 5th wave higher. I'm in it as a long-term investor, and I'm pretty happy about it. So that's XPEV. Let's look right now at Li Auto. Very similar story for Li Auto. Wave 1, 2, 3, 4, 5, large degree wave 1. An ABC correction puts in a large degree wave 2. And then just like XPEV, monster reaction. What I would think about, when we reflect, on this quarter is that traders and investors, hypothetically, they can be buying stocks that aren't going to outperform the next week. They're not going to outperform the next month and still be making the right decision, okay? We knew in the March 2021 sell-off and in the May 2021 sell-off that we were very likely going to be rotating into, software and solar and clean energy for the summer. And we've seen so much confirmation of that the past 2 or 3 weeks, okay? So don't ignore sectors that are down. The whole benefit of wave theory is that while most of classical traders are saying that's weakness, wave theory is saying that's opportunity, and it was, okay? This is a 1, 2, 3, 4, 5 large degree wave 1, an A, B, C correction puts in a large degree wave 2 low. Li Auto going the length of wave 1, placed at the wave 2 low. It's going to 49 for a conservative wave 3 target. It has the shallow wave 4 correction. It goes on a 5th wave higher. And it's the same thing as XPEV. You can go, if you don't believe in wave theory, I hope you believe in math, because you can turn on the Ichimoku cloud and it's the exact same thing, where this wave too low is really being confirmed by a huge Ichimoku cloud breakout. Multiple closes building on this breakout. This is the start of a new monster trend for XPEV and Li Auto. And I don't know how you look at other clean energy stocks and not take these as a smoking gun, because we're going to be, at 49 to 50. And that's not even without using the evidence that the software stocks are they're sending, a smoke signal right now that the growth stocks are going to blow up this summer. Okay. So that's Li Auto going to 50, having a shallow wave 4 correction, and going on a fifth wave higher. I think XPEV and Li Auto, they're in the process of forming huge cup and handle patterns. They're going to start consolidating at this base, and then they're going to explode higher. Love Li Auto. Let's talk about NEO. I mean, this is another one where we're having a monster rally. Okay, this is a 1, 2, 3, 4, 5 large degree wave 1 impulse and ABC correction. We put in that wave too low. NEO's going to hold above 30. If I'm not mistaken, most options, pretty long dated away on NEO are up 100% from when I posted about it. That technically will make a trade risk-free, because whenever I'm in an options trade, I always will sell half when I'm up 100%, remove the original risk of the trade. But I think NEO is going to be, a big winner. I was called crazy for saying that's a wave too low. This is a 1, 2, 3, 4, 5 large degree wave 1 impulse. An A, B, C correction, large degree wave 2. Oh, puppy trades. NEO's not going into 90. That's crazy. Yes, it is. This is a wave 1 and a wave 2. And this is a really nice level for time targets. This is from, 9:30 to about 1:11. And I think we can use a little closer time target by taking this rally, which is from about 316 to about 104. And it's a very similar story for basically all these growth stocks, all these clean energy stocks, where the rally from March of 2020 to late 2020 is going to be replicated. I think it's a very similar story for NEO, where if this is a wave 3 in progress, aggressively by the end of this year, we're seeing NEO test that 96 level. I think pretty conservatively, early into 2022, we're going to see this whole rally, not just for NEO, but for a lot of growth stocks that we're going to go over, get replicated. And if NEO is above 30, that wave too low is in. It's going to be a time for a lot of celebration when NEO breaks that high of 66. But for now, I think that this is a huge impulsive reaction. NEO, XPEV, and Li Auto are loads of evidence. They put in monster wave 2 lows. I think they're leading indicators right now for other clean energy stocks. Okay, so that's NEO. Here's Plug Power. We haven't talked about Plug Power too much. I think it's very similar to Fuelcell, where we have a 1, 2, 3, 4, 5 large degree wave 1, and ABC correction puts in a large degree wave 2 at exactly that 78.6% retracement. The length of wave 1 placed at this wave too low is going to take Plug Power all the way to 91. Very similar story from 316 to very early in the January of 2021, where an 8, 9, 10-month rally will get replicated. The length of wave 1 placed at this wave too low is going to take Plug Power to 91 in 10 months conservatively. Why is that conservative? Because this is clearly a wave too low. Okay, and in Elliott wave theory, wave 3 is stronger and faster than the length of wave 1. I think there's a lot of evidence. If NEO is really in a wave 3, if Plug Power is really in a wave 3, if Fuelcell is really in a wave 3, then they're going to be actually faster and stronger rallies than what we saw in 2020. Plug Power, it's going to seem like it's wide, but this is just how growth stocks work. If we hold above 18.47, which is, about 25-30% to the downside, then the wave 3 target is 91, which is 300% to the upside. So it's still a 10-to-1 risk-reward ratio. The length of wave 1 placed at this wave too low is going to take Plug Power on a monster rally to 91. Let's look at Fuelcell, because it's almost the identical chart. If we look at Fuelcell right here, we have a 1, 2, 3, 4, 5 large degree wave 1, and then an ABC correction is putting in a wave too low. So it's a very similar setup to Plug Power, where if we're above 6.42 at the 78.6% retracement, that wave too low is in. And what's really interesting about Fuelcell is that this rally from 10.05 to 2.09, that's about 5 months. And I think that's a lot of evidence that when we see this huge rally in clean energy, it's actually faster and stronger than what we saw in 2020. I believe this is 1, 2, 3, 4, 5 waves. That's wave 1. We have an ABC correction. We put in a large degree wave 2. The length of wave 1 placed at the wave 2 low will take Fuelcell all the way to 34. I think that happens within the next 7 to 9 months, so long as we hold above 6.42, extremely low implied volatility on Fuelcell and plug power. They've really been consolidating and basing, in my opinion, for all of the third quarter. So that's Fuelcell. Let's look at one we haven't talked about. I think that this is just, really nice evidence, of what I'm talking about, where, we're going to have this huge rally in clean energy stocks, where this is a wave 1 and wave 2. We have another wave 1. And an ABC correction puts in another wave 2 low. This is Bloom Energy, ticker symbol BE. I haven't talked about it too much, but I think it's a very clear ABC correction being put in at the 61.8% retracement. This rally from 323 to 208, it's the exact same thing, where a 10, 9, 8 month rally, if it's a wave 3, it's going to be faster than that, gets replicated. The length of wave 1 placed at this wave 2 low. If Bloom Energy is above 18.40, the wave 3 target is 60. I think, for basically all these growth stocks, aggressively, we're talking about these wave 3s being hit towards the end of the year. Conservatively, in my opinion, they're hitting the first quarter of 2022. So I really like Bloom Energy as a lot of evidence that this is a wave 1, and ABC correction is putting a wave 2 low at the 61.8% retracement. It goes the length of wave 1, places the wave 2 low, and reaches 60 very early into 2022, I think aggressively by the end of 2021. So that's Bloom Energy. I'm going to talk about 2 solar stocks real quick. We've talked about these a lot. This is First Solar, just to kind of harp on this clean energy theme, right? I think that the solar stocks haven't yet, taken off with some of these clean energy stocks. The bigger picture for First Solar is that this is a wave 1 and an ABC wave 2, another wave 1 and ABC correction puts in another wave 2 low. This is an 8-9 year base, a double nest in Elliott wave 3 on a pretty large degree. So my larger degree wave 3 target is 164 to 200. And we can see how we're going to get there if we look at the smaller degree count, where this is a wave 1 and wave 2. We have another wave 1 and ABC correction puts in another wave 2. So I talked about First Solar right there at that low, of 301. And then during that rally, all options on First Solar, became, up 100%. So this trade technically is risk-free, because whenever I'm in an options trade, if it's up 100%, I always remove half, get the original risk out of the trade. And I believe right now that FSLR will go wave 1, ABC wave 2, it's going to go on a wave 3 impulse that is at least the length of wave 1. What's really interesting about First Solar, this move is from 921 to 125, almost exactly 4 months. And that's a pretty short rally. I think 4, 5, 6 months from now, pretty conservatively, First Solar and Plug Power have gone the length of wave 1, placed at this wave 2 low, and reached 121. That's the conservative wave 3 target. We have a shallow wave 4 that retests the wave 1 high. The 5th wave is at least the length of wave 1, and we get to that larger degree wave 3 target of 160. First Solar right now, let's see 67 hold. It's invalidated that this is a big nest if we break below this wave 2 low of 59. So love First Solar. I love Polar Power. I've talked about it in a lot of videos. So for the sake of time, we're going to move on to our third sector. So my third sector that I think is going to be an extremely big outperforming group is the one that's been outperforming for the past 2 weeks. That's just been blowing up. It's the software stocks. Palantir, Fastly, Cloudflare, Okta, Salesforce, Roku, Pinterest, Chewy, Alibaba, and Netflix, and many more. We're going to talk about just those names in this group. But if you've been looking around this week, if you told a software bull, hey, the market was red this week, they're looking at you crazy, because the software stocks had this huge rotation that we've been anticipating. Okay, we've been anticipating a monster rotation into the software sector. We said it was going to be software summer. We were posting pictures of Cathie Wood with an axe in her hand, photoshopped on Jack Nicholson's face in The Shining, because we said Cathie Wood is making a comeback. We are going to rotate in the software. We're going to rotate in the clean energy this summer. We have had a plethora of evidence that mid-May and mid-March sell-off in 2021, that was large institutions rebalancing their portfolio and, just taking large positions to front run that third and fourth quarter outperformance of growth stocks. Now, that does not mean that we, say, oh, growth is outperforming, so I'm just going to ignore the value stocks, okay? I'll say this analogy once. I think when the market runs this summer, it will be the left foot forward is growth stocks and tech stocks. The right foot forward is value stocks like the consumer stocks and the industrials and the travel stocks, okay? I think there's going to be plenty of weeks like this week where software and tech dramatically outperform. There's also going to be a couple weeks where we see these travel stocks outperform, but we predicted that this was going to be a monster rotation into growth stocks this summer. And we have so much confirmation of that right now, from XPEV to Li Auto to Cloudflare to, let's look at Palantir right now. This isn't really a ton of evidence, but I think this is, probably one of the better setups where this is a 1, 2, 3, 4, 5 large degree wave one. Now this rally, it's only about 5 months. It's actually way less than 5 months. It's almost less than 3 months, right? So I don't think the time target for Palantir should be, 3 or 4 months from now. It hits 50. Okay. I think by the end of the year though, Palantir will hit 50 pretty conservatively. This is a 1, 2, 3, 4, 5 large degree wave one, and ABC corrections put in this large degree wave two between the 78.6 and 61.8% retracement. So I want to see Palantir hold this wave too low of 18.5 of this wave too low, of 17.05. I think it will, and then the length of this clear 1, 2, 3, 4, 5 large degree wave one impulse structure will be replicated for a conservative wave 3 target of 53. That's just wave 3. We have a shallow wave 4 correction. We go on a 5th wave higher. Look at this gorgeous pitchfork right now. This pretty reaction on the median with the wick. I think we see very conservatively by the end of the year, Palantir has reached 53. That's the conservative wave 3 target. We have a shallow wave 4 correction. We go on a 5th wave higher. Palantir, that looks like a monster, but it's no Moby Dick. We've got Moby Dick. We caught Moby Dick. Okay, this is Moby Dick. All right, we're Captain Ahab right now, and we slaughtered Fastly between the 78.6 and the 61.8% retracement zone. I think this is Microsoft. I think this is Apple. I think this is Google in the 2000s. That's what Fastly's potential is to me. Because this is a 1, 2, 3, 4, 5 large degree wave one impulse. We talked about with Datadog. The exact same time where this is exactly 7 months. We have an A, B, C correction. We put in a wave too low, okay? Wave theory is the only type of technical analysis that would have called this a monster buying opportunity, okay? All other forms of technical analysis, they're gonna say, oh, that's weakness. Wave theory said that was the 78.6 to 61.8% retracement zone, and we just went fishing, okay? The length of wave one places the wave too low. For me, it's an easy trade, okay? The stop is moved up to 42, which is the entry. The length of wave one places the wave too low, takes Fastly conservatively to 165 for a wave 3. We have a shallow wave 4. We go on a 5th wave higher. For me, that's Fastly's not a one and done, okay? Fastly is wife potential, and for me, in my unprofessional opinion, the way to play it for anyone hypothetically who got into Fastly in that low 40 range, the stop is moved up to break even, and I wouldn't even look at Fastly for a year, okay? Because the length of wave one placed at this wave too low very conservatively takes Fastly to 165. We'll have a shallow wave 4 correction. We go on a 5th wave higher. This at least the length of wave one placed at the wave 4 low. That takes Fastly to the 260s. What happens when Fastly is in the 260s is that these 1, 2, 3, 4, 5 waves ultimately are going to become a subdivision of a larger degree wave one, okay? This is the potential of growth stock investing. This is why we do what we do. This is why, even when growth stock investors, they're getting made fun of, they're getting bullied in the second quarter. We said this is the opportunity when the second quarter ends and the third quarter begins. We're going to be very happy that we took advantage of those huge second quarter dips and software stocks. We went fishing for Fastly. This is a 1, 2, 3, 4, 5 large degree wave one impulse. We caught Moby Dick, okay? This is A, B, C, the length of wave A, placed at the wave B high. Fastly's put in that wave too low. I don't believe we're ever gonna go below 39. To me, the stop is moved up to break even, and I'm logging out of the trading account if I'm a Fastly bull, okay? Because that wave 3 target of 165, that's the conservative wave 3 target. We have a shallow wave 4. We go on a 5th wave higher. You know, you might wake up 3-4 years from now and realize you bought NVIDIA. So that is Fastly. Here's Cloudflare. I think Cloudflare, you know, it's definitely not a setup right here, but it's a lot of evidence. You know, one, that when I talk about, you know, targets that seem crazy, they're not crazy, okay? I talked about Cloudflare at 72, and then we've had this monster rally. We're on track to reach my time and price target. I actually don't think this should be the count, but this is actually the conservative count, so let's just go over it. The conservative Cloudflare count is that this is a wave 1 and a wave 2. This is a wave 3, and ABC correction puts in a wave 4 low. So for me, this 5th wave higher won't be the length of wave 1 because that wouldn't take it to a new all-time high. To me, in this conservative view, Cloudflare's wave 5 would be the length of wave 3, place of the wave 4 low. Cloudflare, to me, it's in the books. It's going to reach 124, and that's a lot of evidence. Let's just look at Cloudflare right now and say, how many software stocks are we asking, you know, they're going to break these highs that Cloudflare has already broken, okay? It's leading the market right now. It's going to the median of the pitchfork. Very conservatively, it's going to reach 124, okay? This is wave 1 and wave 2. This is wave 3, and ABC correction, we put in that wave 4 low. I actually don't even think that's the count, though. I think really the count is that this rally is a wave 1, and then this is a wave 2 low. It's the exact same expectation in the short term that we go the length of wave 1, place it this wave 2 low, and Cloudflare will reach 124. But in this count, that isn't the high. That's the conservative wave 3 target. We have a shallow wave 4. We go on a 5th wave higher. Look at the Cloudflare chart when you look at the Okta chart, because there's a lot of similarities, and we're going to do that right now. But I just want to show Cloudflare is on track for my target that sounded crazy of 124. That's going to end up being very conservative. Okta, beautiful. I love Okta right here. I'm not sure I love it right here, but I love what it's doing right here, where it has a wave 1 and ABC correction puts in a wave 2 low. It has another 1, 2, 3, 4, 5 waves impulse for another wave 1. It has an ABC correction that puts in another wave 2 low. It has another wave 1. It has another wave 2 low. So you're asking, you know, is Okta going to get above the 216 high? Is Okta going to get above the late April high? And Cloudflare already has, right? You have a cheat sheet because you recognize that birds of a feather flock together. Okay, so we have multiple degree counts at play. The first is that this is a large degree wave 1, and ABC correction puts in a large degree wave 2. The length of wave 1 placed at this wave 2 low takes Okta to 322. That's a very conservative wave 3 target. We'd have a shallow wave 4. We go on a 5th wave higher. On the smaller degree, very similar story. We have a 1, 2, 3, 4, 5 large degree wave 1. And ABC correction puts in another wave 2. Now we have another wave 1 and another wave 2. Cloudflare has already broken above both of these highs that were made at the same time. Okay, I think Okta is not going to break below 209. The real invalidation level would be, 207. So it's basically the same. Oh, no, 199. 199 to about 209. That's kind of a 10-point zone. We don't want to see Okta break. I don't think we will see Okta break. And Okta is going to reach my September target of 308 to 322. That's a conservative wave 3 target. We have a shallow wave 4 correction. We go on a 5th wave higher. So that's Okta. Very pretty. We talked about Zoom. I'm just going to talk about Salesforce right now because I think it's a much better setup than Zoom, where if you're conservative, you're calling this a wave 1 and a wave 2. This is a huge wave 3. We have an ABC correction. We put in a wave 4 low at the 50% retracement. I believe wave 5 would be the length of wave 3 placed at the wave 4 low. And we see Salesforce, this is from 330 to, 831. I mean, that's only 5 months. I don't think 5 months should be the target, but I think it's a lot of evidence that really conservatively by the end of the year, aggressively by the end of the summer, this whole rally gets replicated. And Salesforce goes the length of wave 3 placed at this wave 4 low. Salesforce goes to 356. Now, ultimately, I think that's going to be conservative, and here's why. First off, let's just acknowledge the classical trading bull flag traders are probably going to beat the wave theorists here. They're just going to call this a bull flag. The length of the first leg of the bull flag placed at this low, if this low holds, is the target. Okay, they're probably definitely going to be right about that. From a wave theory standpoint, I think that the more accurate count is that this is a wave 1 and a wave 2. We have another wave 1, and ABC correction puts in another wave 2. The length of wave 1 placed at this wave 2 low. If we see 201 hold, it's the same target of 356. But the only difference is for wave 3, it would happen, very quickly, in 4 or 5 months. But also, that would only be the wave 3 target. We'd have a shallow wave 4 correction. It wouldn't be that deep. We'd have a shallow wave 4 correction that would likely retest the wave 1 high before we go on a 5th wave higher. So I think Salesforce looks really good. It's going to hold above 201, it's going to go to 356. I really would not be surprised if Salesforce reached 356 by the end of the summer. I would be very shocked if it didn't reach 356 by the end of the year. Okay, so that's Salesforce. I think Zoom, we should probably talk about Zoom right now. It's having this large reaction. It's kind of funny. This is my second take of this video. I'm not sure I'm going to harp on this, kind of point, but Zoom exploding this summer, we all kind of think about that, right? We're like, okay, Zoom is to 800. What's the media going to be talking about? But for me, Zoom is a 1, 2, 3, 4, 5 large degree wave 1. We have an A, B, C correction. We put in a wave 2 low. Zoom, I believe, holds above 273, and pretty conservatively will go the length of wave 1, placed at the wave 2 low. That takes it to about 800. And in this count, that would only be the wave 3 conservative target. We'd have a shallow wave 4. We go on a 5th wave higher. I think in this instance, a better time target is actually going to be, if we call this a wave 1 and a wave 2, which we certainly can, then this wave 3 high is being put in, and then wave 4 would be the length. Wave 4 would be, would be ending, and then wave 5 would be the length of wave 3 placed at the wave 4 low. I really think it's a 1 and a 2. Either way, we're looking at a very aggressive, rally to be replicated for Zoom, where this whole rally, from December to October, about a 10-month rally gets replicated, and Zoom gets to 800. And I really think conservatively that happens in 10 months. But I don't think that's actually the proper count, because I think realistically, this is a large degree wave 1 and a large degree wave 2. In an Elliott wave theory, wave 3 is stronger and faster than the length of wave 1. So anyway, I think Salesforce investors, they're going to want to look at Zoom, because they're kind of the twin sisters, in that stay-at-home side of the software market, and they both look really good to me. I think Zoom holds above 272. It's pretty similar to Neo. Aggressively by the end of the year, we're at 800. Conservatively, very conservatively, in the first quarter of 2022, we're at 800. And I think that's just a lot of evidence that software, stay-at-home, Salesforce will be, dramatically higher, in the coming, months, and also even in the coming quarters. So that's Zoom. Here's Roku. Roku's looking really pretty. So here is a wave 1 and ABC correction puts in a wave 2 low. Roku has a monster wave 3, has an ABC correction puts in a wave 4 low at the 50% retracement to the penny. To the penny, it puts in a wave 4 low at the 50% retracement. I think the algos are trying to play with us. We'll talk about that in a second. But I think the length of wave 3 placed at this wave 4 low, we see Roku in the 707 range. I think, the ideal time target is hit in the first quarter of 2022. Now, what could a more aggressive count be that took Roku to 707 by the end of the year? It would be that we're at the 50% retracement. So this could be another wave 1 and another wave 2. It's the exact same target in the short term of 707, but wave 3 could be stronger and faster than the length of wave 1. And also, that wouldn't be the top. We'd have a shallow wave 4 correction. We go on a 5th wave higher. But there's no reason to think about that high up, that far away. I think right now, we call this a wave 3. We call this a wave 4 at the 50% retracement. We're looking for a wave 5 to be the length of wave 3, placed at the wave 4 low, taking it to about 707. Extremely conservatively, in my opinion, by the end of the summer, Roku is well above this wave 3 high of about 486. And that's to me is very conservative. So that's Roku gearing up for another monster summer. And I said Roku would be the stock of the summer. A lot of people won't remember this. Way back in June of 2020, we thought Roku, Netflix, and Amazon would be the stocks of the summer. For those of you who don't believe in seasonality, it's very similar to advanced micro devices. A lot of stocks that blew up last summer, look at them closely, because they're setting up again for another huge summer rally. I think Roku is the finest example of that, where the length of wave 3 places this wave 4 low, conservatively takes it to 707. So that's Roku. Here's Pinterest. We haven't talked about Pinterest. I was going to talk about it. I didn't have the stones. I was going to talk about it at 69. But this is a wave 1. We have an ABC correction where the length of wave A places the wave B high is where wave C ended. I believe this is a 1, 2, 3, 4, 5 large degree wave 1. We have an A, B, C correction putting in this large degree wave 2. I don't think Pinterest will break this wave 2 low of 53. I believe it goes the length of wave 1, placed at the wave 2 low. I think it reaches 134. Very similar, March to, February rally, so 11 months. But remember, if this is a wave 3, it could be a lot stronger and faster. I think 9 months, 10 months, really even 8 months is a much better target. If this truly is a wave 3, it will be stronger and faster than this wave 1 rally. And Pinterest is getting ready to blow up. Maybe we'll get a pullback. I'm not hoping. I'm not really holding out for a pullback on Pinterest. It might not be the best setup after it's already had this 4 or 5% gain. But I think the opportunity to trade Pinterest against this low of 53 would be very compelling in the future. I don't think we'll get that opportunity, but I think Pinterest either way is a great example of a wave 1 and ABC wave 2, where the length of wave 1 placed at this wave 2 low. We'll take Pinterest on a conservative wave 3 to 134, similar, where I think very conservatively, extremely conservatively, that's reached in the first quarter of 2022. I actually think that's going to be hit in the final quarter of 2021. So let's look at Chewy right here. I think Chewy might probably be the best setup besides Alibaba in the software sector. We have a wave 1 and a wave 2, another wave 1 and ABC correction puts in another wave 2 at exactly the 78.6% retracement. I don't think this wave 2 low of 64 breaks. That's the stop and invalidation level. The length of wave 1 placed at the wave 2 low will take Chewy to 133. And if we look right here, this rally is from 914 to 215. That's about 5 months. I think, 6, 7 months now, 8 months from now, very conservatively, we're seeing Chewy at 133. Realistically, I think that's going to happen in the next 5 months. And that's where I kind of get this idea that by the end of the year, a lot of these software stocks are going to be dramatically higher. You're going to go on FinTwit every day. You're going to see a picture of exactly what Kathy Wood bought and sold. So that's Chewy. I like it a lot. If it holds above this low of 64, it goes to 133 for a conservative wave 3 target. We'd have a shallow wave 4. We go on a 5th wave higher. So love Chewy. Here is Alibaba. Alibaba is probably the best setup in the entire software sector. I think this is a wave 1 and a wave 2. We have a 1, 2, 3, 4, 5 large degree wave 1, and then ABC corrections putting in this large degree wave 2 low at exactly the 61.8% retracement of the rally. So the wave 2 invalidation is going to be 184 because that's the 78.6% retracement. I don't think we're going to get even close to that. I think wave 2 is in, and we're going to see very conservatively this whole rally will get replicated in time and price, and it will reach 378. But I think, for a time target, we talked about Wayfair. We're not going to look at Wayfair in this video for the sake of time, but I think that this whole rally in orange in time and price, this 7-month rally will get replicated, and we see Alibaba in the 355 to 378 range. Regardless, I still think Alibaba's best viewed as a long-term play, because if it holds above 184, then when it gets to 355 to 378, that's the conservative wave 3 target. We have a shallow wave 4. We go on a 5th wave higher. A lot of Chinese stocks look really good. I wasn't going to do this in this video, but Baidu is just another example of a Chinese e-commerce stock with Wayfair just doing extremely well, where this is a 1, 2, 3, 4, 5 large degree wave 1, and ABC correction puts in a large degree wave 2. If we're above that 78.6% retracement, this is why I didn't talk about, or I didn't really plan on talking about Baidu in this video. The 78.6% retracement of 139 is a little wide. I think very tight. Baidu will hold above 174, go the length of wave 1, place it this wave 2 low. And as nutso as it sounds, I think in the first quarter of 2022, we see Baidu hit that 445 conservative wave 3 target. So that's Baidu. I'm really just using it as evidence that a lot of Chinese stocks, Chinese e-commerce stocks even, look very good. We talked about Wayfair in other videos. I could have talked about JD in this video, maybe a next video, but for the sake of time, that is going to wrap up the software stocks. Okay, so the software stocks are the third sector that I think is going to do very well in the third quarter. So that brings us to the fourth sector that I think is going to do extremely well. Oh, sorry, I'm incorrect. We have one more, Netflix. Okay, Netflix is another software stock, streaming stock like Roku, but it's also a software stock. Wave 1, wave 2, wave 3, ABC correction, wave 4 low is put in at exactly the 38.2% retracement of wave 3. And that's a really nice stop and invalidation level. If Netflix holds that low of 458, wave 4 is in. We got to find this wave 5 target. Now, some wave theorists, they're going to say that this is a triangle and wave 4 ends right here. Okay, if that was the case, the length of wave 1 placed at the wave 4 low is going to take Netflix to 621. That's way too conservative, in my opinion. I think Netflix really, by the end of this quarter, hits 621. But I think the better wave 5 target is to say wave 4 ended here. And wave 5 isn't going to be the length of wave 1, it's going to be the length of wave 3 placed at this wave 4 low. And a lot of evidence for that is that we've already kind of seen, I believe this is wave 1 of wave 5, wave 2 of wave 5. And if we just look right now, there's no way that, wave 3 and wave 4 and wave 5 of wave 5 would end at 621. So I think really wave 3 is going to be the textbook. No, not the textbook. It's going to be kind of what is replicated for wave 5, where the length of wave 3 placed at this wave 4 low will take Netflix to 743. It's just like advanced micro devices and Roku, where it's like deja vu from last summer. They're consolidating, they're boring people to tears, and then all of a sudden, it's a monster rally. I think this wave 3 rally gets replicated, placed at the wave 4 low, and by the end of the year, very conservatively, we see Netflix at 743. I really think aggressively we could be testing that by the end of this quarter. Look for Netflix to be a monster this summer. And we talk about Zoom and Salesforce and these stay-at-home stocks. Netflix is another one where if it's above 458, that's the wave 4 low. I think this whole rally in 2020 gets replicated, placed at this wave 4 low. So the wave 3 rally gets placed at the wave 4 low. It takes Netflix to 743. So those are the software stocks. That is the third group that I think is going to be a huge outperformer in the third quarter. The fourth group, then we'll get into the fifth group, are value stocks. We're going to talk about consumer stocks. We're going to talk about travel stocks in this sector, okay? So what a lot of people are going to do right now, they're going to say growth is outperforming. We've rotated into software stocks. We've rotated into electric vehicles. I'm getting FOMO about XPEV and the software stocks, so I'm just going to ignore value, okay? In my opinion, that's a very bad idea. I think we go left foot forward, it's tech and growth. Right foot forward is value, like consumer stocks and travel. I think having exposure to both is important, okay? So we're going to talk about some value names for this fourth group. The fourth group that I think will do very well in the third quarter are consumer stocks and travel stocks. So we're going to talk about Nike, Procter & Gamble, Walmart, Disney, Boeing, American Airlines, Delta Airlines, Carnival Cruise Lines, and Norwegian Cruise Lines. So here's Nike, okay? Nike's been quiet, a little too quiet. As we're ending the third quarter, I think Nike's one where I really look at as, a change in pace for the third quarter. Here's a wave 1 and a wave 2. We have this large wave 3. It passes the 161.8% extension. We have an ABC correction. We put in a wave 4 low at exactly the 38.2% retracement of wave 3. So this is the textbook place for a wave 4 to end. I don't believe that we go below 125, okay? If we did, then the wave 4 invalidation is the 50% retracement, which is 120. I think Nike holds above 120 to 125, and it goes the length of wave 1, placed at the wave 4 low. And I really think by the end of the quarter, we see Nike at 169, as crazy as that sounds, because this rally is from 316 to about 601. That's, about 3 or 4 months. And I think 3 or 4 months right now is going to be that exact same target for Nike's fifth wave higher to 169. We say wave 2 scares you out. Wave 4 just wears you out. And Nike, right? This is the ABC correction. Wave 4. It's wearing people out. I think wave 4 is in at 125. It's invalidated if Nike goes below 120, and we'll go the length of wave 1, placed at this wave 4 low, and Nike is going to emerge as a new leader at 169. Now, I know Nike, most wouldn't consider it a value stock, but the rest of these stocks we're going to talk about truly are value stocks. I just wanted to group Nike in the consumer side of the market, and because I think it's going to do very well. So here's truly a value stock. It's also a consumer stock. Procter & Gamble, okay? Boring stock, but I think that this is an important stock, for weeks that we are seeing, value leadership. It's also a really nice diversification play, in my opinion. We have a wave 1 and a wave 2, a wave 3 and a wave 4 and a wave 5, putting in a large degree wave 1. We have an ABC correction putting in a large degree wave 2. The invalidation level for that wave 2 low is 121. I don't think it gets broken. I think Procter & Gamble goes the length of wave 1, which is about, I believe, 8 months, 7 to 8 months. But remember, if it's a wave 3, it's going to be stronger and faster than that. So 7 months is going to end up being very conservative. I believe the length of wave 1, placed at this wave 2 low, takes Procter & Gamble to a conservative wave 3 target of 174. We will reach the median of this pitchfork, and Procter & Gamble and Walmart, they're going to move in sync. I think the 61.8 to 78.6% retracement of this smaller degree wave 1 is 125 to 128. That's a pretty nice stop level, but really the invalidation level is 121. I don't think that's going to get broken. I believe Procter & Gamble will go the length of wave 1, places this wave 2 low. This is a value stock. It pays a nice dividend. It could be, a really important diversification piece in my unprofessional opinion. If we look at Walmart, it's almost the exact same thing. And this does pay a really nice dividend. So if we got to 174, we'd have a shallow wave 4 correction. We go on a 5th wave higher. We could be talking about Procter & Gamble for a while. Someone hypothetically could be collecting dividends along the way if that was the type of investing they were interested in. So that's Procter & Gamble. Here is Walmart. Very similar chart, almost identical, where we have a 1, 2, 3, 4, 5, putting in a large degree wave 1. We have an ABC correction putting in a wave 2 low at the 50% retracement. The length of wave 1, placed at this wave 2 low, is going to take Walmart all the way to 178. This wave 2 low of 126, that's the wave 2 invalidation. I don't think it's going to get broken. Very similar to Procter & Gamble, the 61.8 to 78.6% retracement of 129 to 132 might be a nice stop. But I really think, we're not going to see 126 get broken. The length of wave 1, this 7 to 8 month rally will get replicated. And like Procter & Gamble, that's going to be a conservative wave 3 target of 178 in time and price. We have a shallow wave 4. We go on a 5th wave higher. I think Procter & Gamble, Walmart, and Nike, they're going to emerge as leaders in the consumer sector. This is the sector I imagine many people have fallen asleep on, okay? And I think that these stocks give a lot of diversification. They're kind of in the more defensive sector of the market. They're also really nice value plays. So that's Walmart. Let's talk about some travel stocks right now. Here's Disney. All right, so this is Disney. I think Disney looks really pretty. We have a wave 1 and wave 2. We have a wave 3. An ABC correction wave 4 puts in at exactly the 38.2% retracement. So we don't want to see this wave 4 low of 167 get broken, okay? If it did, would that be the end of the world? In my opinion, no. The 50% retracement of wave 3 is 155. That's kind of the textbook and validation level for a wave 4 to be put in. I don't believe either of those levels will get broken. I believe the length of wave 1 placed at this wave 4 low is going to take Disney to about 216. And I think that's going to happen, just like Nike, where this, kind of less than 3 month, less than 4 month rally gets replicated. I truly believe by the end of the quarter, Disney has reached 216. And then it gets very interesting because that's the textbook wave 5 target. We're talking about the end of the quarter, Disney at 216. We'd be looking for an ABC correction. And, September is a pretty bearish month. So I could see all these travel stocks melting up in the 3rd quarter. And then when we have that kind of bearish September where we have that, fall, portfolio rebalancing that we could have while Zoom and Salesforce and the stay-at-home stocks are still doing very well, some of these textbook travel stocks like Disney and Delta Airlines, they're pulling back in the generational wave 2 buying opportunities. I think that's pretty interesting. We might want to stock our pantries when Disney reaches 216. I think it really conservatively will do that by the end of this quarter. Let's talk about Delta Airlines because it's almost the exact same count. Whereas a 5 waves impulse, we're looking for this 5th wave target. It's wave 1 and wave 2. We have a 1, 2, 3, 4, 5. 1, 2, 3, 4, 5 waves impulse to put in a large degree wave 3. We have an ABC correction putting in a large degree wave 4 low. The length of wave 1 placed at this wave 4 low is going to take Delta Airlines to about 62. That's a conservative wave 5 target. Very conservatively, that's going to be reached by the end of the quarter. We'll talk about American Airlines and Boeing and Carnival Cruise Lines, why I think that the melt up in the travel stocks could be a little quicker than the end of the quarter. I think it could be, mid to late July, very conservatively early August. But I think we see, a huge rally in Boeing and American Airlines. We'll talk about those in a second. But the length of wave 1, placed at this wave 4 low, will take Delta Airlines to 62. And then when Delta Airlines is at 62 and Disney is at 216, they're both at their textbook wave 5 targets. And then an ABC correction for Delta Airlines and Disney would be a generational long-term buying opportunity. So, we wake up, Delta Airlines is at 62, Disney's at 216. I'm going to Tom Thumb. I'm going to get my pantry stocked, okay? The length of wave 1, placed at the wave 4 low, is going to take Disney and Delta Airlines to 62. And then while all the stay-at-home stocks are taking off, the travel stocks are pulling back into a generational buying opportunity. I think that's pretty interesting. So, enough on that. Another way to get a wave 5 target, here's some free alpha. You can take the inverted retracement, the negative 123.6% retracement of the wave 4 correction is where the algos love that negative 123.6% inverted retracement. That's a great place to get a wave 5 target. That would be 63 for Delta Airlines, That's also the length of wave 1 placed at the wave 4 low. So 62, 63, I think that's been programmed. If Delta Airlines is above, 41 to 38, and we also have a really nice invalidation level of 37, then I think Delta Airlines, that's going to invalidate the wave 4 low. I don't think Delta Airlines breaks below 38 or 37 or even 41. I think we're starting this fifth wave higher right now. So that's Delta Airlines. Very similar count to Disney. I'm kind of just joking around about that wave 5 thing, but here is Carnival Cruise Lines. It's really important to look at Carnival Cruise Lines because when we look at a lot of these stocks, what we're really asking right now is will this mid-March high get broken? And I don't believe it will. We're asking right now for the airlines, will this mid-March high be broken? We've already seen Carnival Cruise Lines break above it. I think Carnival Cruise Lines, if we looked at XLE, it's the exact same thing. We formed this mid-March high, and what we're asking right now for all of the airlines is, are you going to break above this mid-March high? And Carnival Cruise Lines and XLE, the oil stocks, they already have. I think they're leading indicators right now in the airline sector, where this is a wave 1. We have ABC correction putting a wave 2 low. Carnival Cruise Lines, in my opinion, will replicate this rally, which is less than 2 months placed at this low. And I think that's where we get, where the end of July, that's 6 weeks from now, that Carnival Cruise Lines pretty conservatively has gone up to 36. That might be too conservative because we see a shallow wave 4 correction, then we go on a fifth wave higher. And I think we want to make sure Carnival Cruise Lines doesn't break, that low of 23. These lows of 23, we really want to see hold for Carnival Cruise Lines as market bulls in general. If it does, the 161.8% extension is 36. We have a shallow wave 4 correction. We go on a fifth wave higher. Love Carnival Cruise Lines. And I love it as a leading indicator. Here's another cruise line. It's just Norwegian Cruise Lines. It's just a very similar setup where you have a wave 1 and wave 2. The 161.8% extension of wave 1 is 38. That's the textbook wave 3 target. We have a pretty nice path to 38 right now. And I think Carnival Cruise Lines and Norwegian Cruise Lines will hit both of those levels in July. We don't want to see this low of 24 get broken for Norwegian Cruise Lines. Let's talk about American Airlines. Let's talk about Boeing. They might be two of the better opportunities in the sector right now. I think American Airlines and Boeing, they kind of lagged, Southwest Airlines and JetBlue and Delta Airlines because they have not yet reached the 161.8% extension of wave 1. I think they will, very soon. And we're going to have this wave 1 and ABC correction puts in a wave 2 low. We go to the 161.8% extension of wave 1. That's 31. We have a shallow wave 4 correction. We go on a fifth wave higher. Right now, market bulls really want to see American Airlines not break below that low of 19. And a lot of these airlines, we don't want to see, these lows right here be broken. But we've seen Carnival Cruise Lines and Norwegian Cruise Lines, they've already broken above this high. And I think that's a lot of evidence that the travel stocks have already started, this impulse, sequence higher to the 161.8% extension. I think American Airlines replicates this rally, which is, from basically exactly 2 months. It placed at this low, and it's going to reach 31. We have a shallow wave 4 correction. We're going a fifth wave higher. I really like American Airlines. I really like Boeing, too. Boeing is a ton of evidence, in my opinion, that the market has a lot more upside. And if we look at it, we have this wave 1 and ABC correction puts in a wave 2 low. We connect the beginning of wave 1 with the high of wave 1 and the low of wave 2. We have a gorgeous Andrews pitchfork. I believe the median of this pitchfork is going to be reached when it's all said and done. We can see with our own eyes right now, that's above 400. But, in the shorter term cycle, we need to get to 300 first. We have a wave 1 and a wave 2. We have another wave 1 and another wave 2. So the length of wave 1 placed at this wave 2 low will take Boeing to 296. And the 161.8% extension of wave 1 is the textbook wave 3 target. That's very close to 307. And then in the smaller degree, we have another wave 1 and a wave 2 ending at the 61.8 to 78.6% retracement. Carnival Cruise Lines, XLE, they've already broken above this mid-March high. I believe that Boeing is going to hold above 219. It's going to go, the length of this rally, which is, less than 2 months, and it's going to reach 305, 307 for a conservative wave 3 target, have a shallow wave 4, and have a fifth wave higher. So, I wouldn't, ring the bell on the travel stocks or the more names more associated with inflation just yet. So that's Boeing. That's American Airlines, that's Delta Airlines, that's Carnival Cruise Lines, that's Norwegian Cruise Lines, that's Disney, Walmart, Procter & Gamble, and Nike. Those are the value stocks, the consumer stocks, and the travel stocks. They're my fourth group that I think are going to do very well in the third quarter. Now, for my fifth and final group, we're going to talk about the precious metals, and we're going to talk about the cryptocurrency market. The only reason that this is the number 5 group is because I really think these are more 2-quarter plays. These are, kind of the best long-term opportunities in the market right now. So we'll talk about precious metals. A lot of people roll their eyes. Why is it different this time for precious metals, puppy trades? Why is it different? Well, if you don't believe in wave theory, here's the first thing we can do. We're not going to talk about wave theory just yet. Here is, the 20-year chart of silver. Okay, so puppy trades, why is it different for the precious metals this time, right? I always hear it's different. If we turn on the Ichimoku cloud, here is an objective, non-wave theory-based indicator that silver has had a monster change in trend on the long-term time frame, okay? So if you don't believe in wave theory, I hope you believe in math, okay? These Ichimoku cloud breakouts can be huge signals on the longer-term charts. And it's the same thing. We'll talk about a uranium chart in a second, where what I really like to use these Ichimoku clouds for is if you have a wave 1 and you have this big basing pattern to put in a wave 2 low, the Ichimoku cloud breakout can do a lot, like we talked about with Li Auto and XPEV, to confirm that's the wave 2 low. I believe the length of wave 1 placed at the wave 2 low is going to take SLV to 50. But before we get into the wave 3, here's an objective reason why it's different this time for the precious metals, where we have a monster breakout, several candles closing above the Ichimoku cloud. And if we look right now for silver, I'm going to turn off the Ichimoku cloud in a second. I just like it because it's so objective, okay? It's not based on wave theory. It's just based on pure math. And the large breakouts where you go from below the cloud to above the cloud, combined with wave theory, can work wonders to confirm that's the wave 2 low being put in. This is a wave 1 and a wave 2. The length of wave 1 placed at this wave 2 low will take SLV to 50. Now, I think SLV is going to 50, and I think SLV holding above 20.45 is a pretty important level in the short term for a lot of the precious metals. We want to see SLV hold above 20. If it does, this is 1, 2, 3, 4, 5. We're going to get to this larger degree wave 3 target of 50. That's a conservative wave 3 target. We have a shallow wave 4. We go on a 5th wave higher. Now, for the skeptics, it's not just the precious metals, okay? No one's making fun of the uranium bulls. I haven't talked a lot about the uranium stocks. I don't think they're a great setup right here. But here's CCJ, okay? Cameco Corp, they're a huge uranium miner, and it's the exact same thing. It's not just precious metals, okay? It's bread, it's meat, it's cotton, okay? It's orange juice. It's uranium, okay? It's a commodity super cycle that we're going to see, okay? And before we get into the wave theory, it's the same thing, okay? You turn on the 20-year chart, you turn on the max chart, you go to the Ichimoku cloud, and what do you see? You see a monster breakout, This is not a wave count. This is, mathematics telling you that this is a huge rate in trend change on the largest time frame for uranium, for silver. It's a commodity super cycle, okay? It's not just about the precious metals. It's a commodity super cycle breakout that we're seeing on these monster time frames. So Cameco Corp, it's just another example of it's not just silver, it's every commodity we're about to see explode. And I love this sector because it probably doesn't have a lot to do with other stocks and a lot of sectors that people are interested in. So this is a wave 1. We have an ABC correction. We put in this wave 2 low. I don't think Cameco Corp is a great setup right here, but if it's above, this low of 5.30, which I know that's way too far away, like I said, it's not a great setup right here, then the length of wave 1 placed at this wave 2 low very conservatively takes it to about 59, and it's just another example of the commodity super cycle. That's a uranium stock. I feel very similarly about energy fuels. And let's look at, some of these other precious metals, kind of get a better short-term picture of what could be going on. This is GLD. If this rally, it's another summer rally, right? Everyone's bored before the summer. From 316 to, 803, that's 5 months, okay? The length of wave 1 places this ABC wave 2 low that's put in at exactly the 61.8% retracement. I believe it's going to hold. I believe the length of wave 1 places this wave 2 low. We want to see SLV hold above 50. We want to see GLD hold above 157. Now, I don't think 157 gets broken. Okay, I think that we are within a smaller degree nest, or this is a smaller degree wave 1. We're finishing a smaller degree wave 2. In a hypothetical situation, which I'm not expecting, where 157 was broken, we really want to see the 78.6 to 61.8% retracement contain that bounce. Okay, I don't think we're going to break below this low of 167. I think we're going to go the length of wave 1, place at the wave 2 low. GLD is on its way to 216. That could be reached by the end of the year. Okay, so I want to see right now GLD hold above 157. If it does, it's wave 3 of wave 3. And to me, the precious metals right now, it's Bitcoin below 10K. Okay, yeah, I'm screaming, I'm typing in all caps, and because it hasn't moved yet, right? Well, then why is it going to move now? Okay, it's a monster breakout for silver, for uranium on the longest term charts. This is a huge nest all over the mining stocks. Okay, it's really, the precious metals, the spot metals, in my opinion, they're not the way to go. It's the mining stocks. We talked about SILJ. Here is SIL, the large cap silver mining stocks. They look really good. This is a wave 1 and ABC correction puts on a wave 2 low. We have a wave 1 and a wave 2. We have, we've broken above this wave 1 high. I believe we've broken above this wave 1 high. That's 54. Okay, we haven't broken above this wave 1 high yet. Okay, when we do, it's going to confirm that we're within wave 3 of wave 3. We're going to go the length of, this wave 1, place at this wave 2 low. And the wave 3 target is the 161.8% extension of wave 1. That's 78. We have a shallow wave 4. We go on a 5th wave higher. So for all the invalidations, I want to see GLD above 157. I want to see SLV above 20. And to me, these are monster long-term setups. Okay. Note, a lot of precious metal stocks like Wheaton Precious Metals, they've already broken this April 2011 high. Spot gold has already broken above this April 2011 high. That's why we think a lot of these precious metal miners are going to do very well. If we look at First Majestic Silver and kind of the small cap, silver miners, it's really a leading indicator. Okay, why is it different this time? Well, we didn't see, a silver miner blow up, 40% in a couple of weeks before, right? And this is, AG, where we have a wave 1 and ABC correction puts in a wave 2 low, another wave 1 and another wave 2, and then coming into this year, at the beginning of this year, AG, First Majestic Silver, was 12. Okay, it blew up to 24. Okay, it's not like the silver miners haven't done anything. We have seen a large move, and I think we're going to see a big move this summer and into the end of the year. The only reason that the precious metals and the crypto are in the number 5 slot is because they're a longer term opportunity than just the third quarter. Okay, and that's not necessarily a bad thing. I think that AG, it's already broken above this high. It's already, and it's on its way to break above this high. It's confirmed to be within wave 3 of wave 3. It will go to the median of its pitchfork, okay? The very conservative wave 3 target is 28 for AG. I think BTG is another one. BTG Gold Corp, this is not the cryptocurrency. I would probably get in trouble if I was talking about BTG, the cryptocurrency. But this is wave 1 and wave 2. This is BTG Gold Corp. B2G Gold Corp, where it's a wave 1 and wave 2. We have another wave 1 and another wave 2. We have another wave 1 and another wave 2. The length of wave 1 places this wave 2 low takes BTG Gold Corp to 9.52. That's the conservative wave 3 target. We have a shallow wave 4 correction. We go on a 5th wave higher to 12. We just talked about a company that mines gold tripling. Okay, remember, I want to see 157 on GLD hold. And, for me, I haven't seen a silver miner I don't like. That's BTG Gold Corp. I want to see SLV above, 20 in the short term. In the long term, I just think Pan American Silver, this might be the racehorse where this is a wave 1 and ABC correction puts in a wave 2 low. We have another wave 1 and another wave 2. Now we're within wave 3 of wave 3 of wave 3. This is a 1, 2, 3, 4. The conservative wave 5 target is the length of wave 1 placed at this wave 4 low. And if silver SLV is above 20, I've got, in the next 6 months, in the next 7 months, Pan American Silver will reach 44. Why is that important? Because it will be above this grand super cycle wave 1 high. It's going to break above this 2008 high. Wheaton Precious Metals, already has broken above both of these highs. Pan American Silver, I really like. I also like GOLD, right? And this is the thing. Everyone says, oh, you talk about so many stocks. Talking about all the stocks and seeing all the stocks in the sector have great setups is part of the analysis, okay? It's not like obviously I can't invest in every single one of these, but if I have a lot of holistic evidence from the entire sector that's going to do well, that helps with the analysis, okay? So this is GOLD. We have a wave 1 and wave 2, another wave 1 and another wave 2, another wave 1 and another wave 2, okay? And this rally is from this is from March 2020 to August 2020, okay? It's 6 months, okay? This could sneak up on us. It's a wave 3 target. It's going to be a lot stronger and a lot faster than the length of wave 1. And I think, towards the end of the year, we're seeing, very conservatively in the beginning of 2022, but really, I like these as long-term holds. GOLD is going to go to 42, have a shallow wave 4 correction, go on a 5th wave higher. We're talking about the largest gold mining stock in the world, going from 20 to 50, okay? And, I don't think it's time to think about silver when SLV is above 50. I think it's time to think about silver when SLV is below 25. I like Barrick Gold Corp in the horse race. Let me get into the precious metals real quick. Let me get into the cryptocurrencies real quick. Wrap up this video. Here's Bitcoin. Love Bitcoin. This is, really pretty. Wave 1 and wave 2, another wave 1 and another wave 2. Ethereum, to me, is the best look we have right now on cryptocurrencies. I want to see Ethereum hold above 1,720 to 1,740. We'll get to the Ethereum chart right now. I think that there's a lot of evidence. This is the wave 1, okay? It feels like a wave 3. It felt like a wave 3, but it was really a wave 1. We have an ABC correction putting in this wave 2 low. I want to see Bitcoin hold above 30K. The 61.8% retracement is 27K. And the length of wave 1 placed at this wave 2 low will take Bitcoin to 91K. Now, pretty conservatively, that's going to happen, in the first quarter and second quarter of 2022. Why is that conservative? Because if this is really a wave 3 that we're put in, it will be stronger and faster than the length of wave 1 in time and price. I think the length of wave 1 placed at this wave 2 low. Bitcoin's next target is 91K. I want to see 27 to 30K hold for now. And if we look at Ethereum, I think we have a better look, right? And this is why I look at all the stocks in the sector, okay? I don't play favorites. This is Ethereum. We have a wave 1 and a wave 2. We have another wave 1 and another wave 2 being put in at this 61.8% retracement. That's 1720. This low is 1740. So right now, crypto bulls really want to keep Ethereum above 1720. Okay, confirm that's a wave 2 low and use your imagination if it's not broken, because this is a wave 1 and a wave 2. The length of wave 1 in time and price is going to end up being a conservative wave 3 target of 6,049 for Ethereum. We'd have a shallow wave 4 correction. We go on a 5th wave higher, and Ethereum would be in la la land, and Litecoin would be with it. I think Litecoin, when we talk about using holistic evidence, Litecoin's a great example of that. Because if we look at the long-term chart, there's a lot of unfinished business for Litecoin. I mean, really, this is if it were any other chart, this would be huge, right? But we just ignore Litecoin. It's kind of the stepchild right now of the cryptocurrencies. We have a wave 1, an ABC correction puts in a wave 2 low. We have another wave 1 and another wave 2. And then look at this beautiful, beautiful, beautiful reaction on the median of this pitchfork. And then we're like, oh, pitchforks don't even work. Explosion for another wave 1. And then we have an ABC correction past the 61.8% retracement. So that's just a ton of evidence. This correction that we're in, you can't call it a wave 4 because Litecoin is well past the 61.8% retracement. I don't think Litecoin breaks below 118. I believe wave 2 is in for Litecoin. It will go the length of wave 1, place at this wave 2 low, and reach a conservative target of 509, have a shallow wave 4 correction, and then ultimately a 5th wave higher will take Litecoin all the way to the median of this pitchfork, okay? I use holistic evidence in my analysis. I really think we want to see Ethereum above 1720 to 1740. We also want to see, this is a pretty one, Marathon Patent Group, another crypto miner. I like a lot of the crypto miners. This is just for the sake of time. 1, 2, 3, 4, 5, large degree wave 1, ABC correction, large degree wave 2, Marathon Patent Group, crypto bulls. We want to hold Marathon Patent Group above 18.32. I know that sounds wide, but that's that's the textbook wave 2 low of the 61.8% retracement where we formed a big wick, okay? If that is the wave 2 low, you can't say Marathon Patent Group is going to explode, but Bitcoin's going below 10K, okay? That doesn't make any sense, and I don't think it will. Bitcoin, in my opinion, is starting to run to the 6-figure, wave 3 target right now. And I think that's going to take Marathon Patent Group into the 3-figure range, where this is a 1, 2, 3, 4, 5 large degree wave 1, and ABC correction puts in a large degree wave 2. If Marathon Patent Group is above 18.32, the length of wave 1 places this wave 2 low, will take it to 75. So those are my top 5 sectors for the third quarter. Okay, the only reason that the precious metals and the cryptocurrencies were the number 5 spot was because they're really longer term opportunities. But I'm really excited for the third quarter. I think Microsoft, Amazon, breaking above or getting very close to breaking above, those mid to late April highs is a lot of evidence that even in the short term, the market has a lot more upside.